Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to Empire. Very excited about this one. I've got home court advantage on this one. It's East Coast time, 5:20 p.m. We're good. I got three guys who are between 11 and midnight here. So I think I got the home field advantage. Rob, Santi, welcome. And we've got a special guest, fan of the pod, Ryan Zurrer. So Ryan, welcome to the show too.
Thanks for having me, guys.
Santi, Rob, how's Europe? Whatever you guys are doing.
Well, I'm in Amsterdam for Money 2020, which for people who don't know is like pretty much the biggest like fintech payments conference in the world. They do one in Vegas in October, and one in Amsterdam in June. And the one here during June is like it's basically like a trade show. Like every big payments company and like fintech company in the world comes. And same as last year, literally the only thing people want to talk about are stable coins and like AI, essentially, agentic commerce. And at the same time, I'm having these conversations, and everyone's, the biggest tech companies in the world are like talking about implementing stable coins. Bitcoin is just nuking, and somebody, maybe Michael Saylor, is just like selling and selling and selling. And so it is funny to this dichotomy because like you don't like nobody I'm talking to has any idea what's going on, and I'm sitting over here like the world is melting. So
yeah,
guys. How stupid is it that we're evaluating the technology based on the price? Like this is how bizarre crypto as an industry is. Like companies don't make a decision on whether to buy Anthropic or SpaceX or Tesla because the stock is up or down. Like USS, this is like, to me, that's why crypto is so early. Like you can't go in a conversation and talking to like, people to deploy like MoonPay or Deal, and they're like, you know what, guys, we're not going to do this because Bitcoin's back to 67K and Michael Saylor, the Ponzi that is MicroStrategy, is dumping coins. It's like, who gives a shit? It's like we keep talking about price. You know where I stand on that. I'm sort of tired of it because I was beating the drum that I was deeply bearish since November of last year, but I don't care anymore. I'm talking about AI and other stuff. Ryan, I know you're a big investor in SpaceX, so I want to hear all about that stuff.
Yeah, I think we should. There's two events we need to recap. So Rob gave us the Money 2020. Ryan and I were just hanging out at this All In Summit, which is either cool or cringe depending on who's listening.
Cringe.
And it's all right. I
thought it was great.
Rob's on the waiting list, so maybe he gets in next year.
That's it. I just didn't get in.
It was very well curated. Everyone you talked to was really thoughtful, CEOs or GPs of really significant funds. The on-stage content wasn't overdone. A lot of the best lessons came out of the random conversations that you were having, and you kind of like felt a need or desire to have lots of random conversations because there were so many smart people in the room. So I thought it was great. I don't know, Jason, what'd you think?
Yeah, I thought it was one of the better curated events I've actually ever been to. I mean, it's very few speaker sessions, but the speaker sessions were incredible, right? It's like Bill Ackman, Brad Gerstner, Gavin Baker,
Thomas LaFont's presentation.
Thomas LaFont, Co2 founder. I thought Sarah's presentation conversation was probably the best. The CFO of OpenAI. I think she'll be the next CEO of OpenAI. She was fantastic. So yeah, a lot of learnings. So Ryan, I want to bring you on because this is a crypto podcast, but we do need to talk SpaceX because my biggest takeaway from the All In conference was crypto is like a dot on an elephant's ass right now for the real capital allocators. It is. I know Rob's at Money 2020 and it's very hot there, but like from a capital allocation perspective, there every single panel at Money 2020 except maybe Nikesh from Palo Alto turned into a conversation about either OpenAI, Anthropic, or SpaceX. And every dinner conversation was SpaceX. And every drinks conversation was SpaceX. And you are, for people who don't know you, very early crypto person, and did very well, and one of the, I think, first employee at Polychain, and now run a fund called Dialectic, and have done very well in crypto. But I think your maybe biggest position is not crypto anymore, and you've been accumulating a lot of SpaceX. So I'd love for you to maybe talk through just how you view what's going on right now, and how, honestly, how historic this is, I'd say.
Yeah, so for context, I've been accumulating positions in SpaceX since 2018. Very grateful to be good friends with Steve Jurvetson, which has been a lot of that position, but it's been wherever I could get it for some time. So I have been parlaying the crypto wins into SpaceX for now 8 years. And I was really surprised, like in our office, it's just such an echo chamber of like Elon bulls and and people were super excited about SpaceX. I thought I was going to go to this all-in event because all the besties are exposed to SpaceX, and it was just going to be like a pre-IPO party, and everyone's going to be talking, how great this is going to do. I was really surprised at the other side of the table. There's a lot of bearishness in the market around this IPO. Because when I look at my model and the way that I value SpaceX is what I'm calling a probabilistic sum of the parts. So you need to look at all the different business lines of SpaceX. There's 12 different business lines between launch and Starlink direct to customer, X platform, Grok, XAI. But then you've got Colossus. You'll have orbital data centers, and then you've got you've got to at least have some kind of thought around the sort of deep space opportunities, off planet resource extraction, Mars colonization, before that lunar colonization, and think, and you can put a really low probability on these things, so discounting them really strongly, but you do have to like think about this stuff. And that's really the interesting thing for SpaceX for me, is that um, there are just so many possibilities. And if any one of these things goes right, it's a multi-trillion-dollar company. And that's why I've been saying to people in crypto, whether they want to hear it or not, for a number of years, it's more important to own SpaceX than it is to own Bitcoin. This is a more fundamentally necessary asset to have in your portfolio, because the upside is all of the infinite possibilities of space, right? And very clearly, this will be part of the inspiring future that we will live in.
I mean, there's a lot to unpack there, Ryan, but I love the thinking. I do think it's like the one-of-one companies. Plus, Elon is, I heard it somewhere, Elon has never lost money for investors, and that is something that, just a lot, it resonates really well. But let's talk about the bearish case. I mean, what were some of the conversations in the Elon Summit? What is the key, like, as you know, probabilistically, the outcome here? Like, what is the most extreme bear? What is, you know,
Yeah, so the bearish case that you're hearing both from, say, the armchair analysts and they're at the event, is the fact that the company is unprofitable, or that it's trading at 100 times 2025 revenues. And you know that that doesn't go deep enough, because guess what? They just doubled the revenues with one deal on Anthropic. Plus, they're adding, just this last week they added another $4 billion contract with the U.S. Department of War. So revenue expansion is really significant. In fact, one of the things that's been so frustrating trying to get into SpaceX over the years is that it's been so profitable. They haven't done a round since the J round in 2019, right? It's only been tender bids. And so yes, when they sort of merged in XAI and X.com, that that dipped it into sort of a cash flow negative position on a temporary basis in kind of a sum of the parts at that moment. But all of the things that are executing right now, um, not even including any revenue from uh, from direct to sell Starlink. Um, we still are looking at close to 50 billion in revenue this year. It will be profitable again this year. It's been profitable since 2018. So I don't think that is the right sort of bull or bear case. The right bear case that I think you can reasonably draw to is, do you get a blue sweep in November and then you get antitrust concerns and you just get like regulators kind of chipping away at them, death by a thousand paper cuts, because you've got Democrats controlling these various entities. I think that's a fairly reasonable one. Competition out of China is increasing really quickly. They've got great manufacturing capabilities. Ultimately, this is a manufacturing game as much as anything else. I think those are coherent, um, uh, arguments for the bear side, that it's not going to continue to be a monopoly, so on and so forth. But that's not the arguments that we're hearing today. The arguments that we're hearing today are on a backward-looking profitability question, which that's not how you value businesses. You value it based on the forward expectation of profits brought to present value, right?
Ryan, there was a I don't know if you saw it, but there was a Goldman report that came out today that said essentially that they expect SpaceX to get to $320 billion of revenue in 3 years
Yep.
from now, which
Yep.
obviously aligns a little bit with what you're talking about.
And
Primarily
1.8 in a decade.
Yeah, 1.8 in a decade. Yeah, and it aligns. I think the two big pieces are, one, Starlink is going to continue to grow dramatically, and then it's basically the data center business and like the deal that they did with Anthropic being kind of the harbinger of things to come. I think Brad Gerstner's actually talked a lot about this too as part of the IPO, about how the Anthropic deal signals, how basically like there's nobody better in the world at building hardware or building, physical assets than Elon. And so we have this energy problem, we have this data center problem, and Elon is probably the right person to fix it. And so that's really what they're going to lean into a lot during the roadshow. And so I don't know if how deep you've really gotten, but how can you talk about that a little bit and kind of what you expect the business to look like? Is it Mars colonization, or is it really like this is just going to be the single best data center business in the world?
Yeah, no, I mean, really, like, in order to try to like keep ourselves grounded on this valuation, that probabilistic sum of the parts. What we do is look at a 5-year timeline, a 10-year timeline, and then a 20-year timeline, with the 20-year really like heavily discounted, like an underweight on that. And in the sort of in the 5 and 10-year timeline, it's launch services, it's Starlink connectivity, it's direct to sell, and then frankly, there's the big growing revenue stream right now is Starshield, Golden Dome, and defense. Like it, people forget that SpaceX is also a neoprime, right? A defense neoprime. It's really standing to capture a lot of the increased spend, not only from America, but from other countries as defense spending explodes around the world. Colossus is going to be, if he just continues to build out Colossus, so Colossus 2 up to now, a million GPU equivalents, Colossus 3, macro hard continuing to build out at the aggressive rate that, to your point, only Elon can build. That's a really great cash flow business. So I have it actually at lower than Goldman predicted. So I have 2035 revenues at 1.2 trillion, with all of those things baked in. And and that's only with 23 billion from Terafab. People forget that like Terafab is going to be a whole other Nvidia, right? That again, Elon and his team are uniquely positioned to execute on. That's going to be really, really exciting. So the way that I've taken it to try to be conservative as possible is take a conservative approach to each one of the 12 business lines, and then but then the sum of those still makes this valuation of 1.75 or $135 really cheap. I think like my current is $185, and I think we're probably in that this summer, or I thought that going into this past week, until I heard all these bears, and I was like, wait, Like how? So there is a lot of bearishness yeah, in the market. I don't know how much of that is just people who are butthurt because they missed it, and how much people are actually like thoughtfully dissecting where we're overestimating. But it's a pretty conservative approach to the revenues. And you do have to consolidate all 12 businesses at some point.
Hey, Ryan, I've been noticing in the timeline. I mean, obviously, memory has ran up quite a bit. There's this guy in the UK basically runs a research subscription. Says he's really questioning the ROI of AI spend. He's like, and look, whether you want to believe his arguments or not, I mean, I think it does pose the question of, I do think we're going to continue to see this more and more. It's like, okay, like Uber just really set a cap on token spend. You had, I think, Meta cut back. So we're going from spend all the tokens you want to, wait a minute, not so fast. And what's the ROI on that? So look, I mean, I think, and also there's a lot of negativity in AI, like just from a lot of, to your point around what's really the bearish case for SpaceX and candidly just Max 7, the broader markets is just a lot of hostility towards AI and the destruction that it's having, socioeconomic impact for the vast majority of people. Have you guys done a lot of thinking around like quantifying this ROI of AI spend? Because we talk a lot about like Chamath said in the Allen Pot, like follow the dollars, you'll do well if you invest there. Like energy, chips, and everything that goes into the chip. Not so much like the Max 7 that is now spending a ton of capex that may or may not. There's sort of a disconnect, like where you spend and when you realize that return. What's your view on that?
Well, I mean, for me, I'd love each of yours viewpoint on this, but it is absolutely shocking the uh, the like veer towards profitability that Anthropic in particular has taken. Like I don't think we've seen these types of revenue growth numbers from any large scale company in the history of mankind. So when when an AI product hits product market fit, clearly, clearly there's demand. Clearly there's people willing to pay, and that may normalize. But then we have these whole host of other things on the horizon. You know, at the All In Liquidity Summit, there was a lot of talk around the sort of Johnny Ive puck, or this AI native device that will just drive a lot more inference. In any case, we're going to see a ton more like node edge inference driving AI, and that could actually be more profitable for model. For the foundation models, that could be really exciting there. So I certainly, I wouldn't want to be in Michael Burry's shoes and shorting this stuff right now. Like that seems like, a recipe for disaster. Obviously there has to be some margin compression across the stack, whether it's memory or whether it's, foundation models building for coding. These margins will compress. But at the same time, what we see is something that I wish we would have seen earlier or more often with crypto is real product market fit. People loving the product, right? Just like leaning into the use of it. And it's something that we've kind of waited for however many years in crypto, saying that it's just around the corner. And lo and behold, we've never been able to get users for any kind of product this way.
Robots and machines will outnumber humans on-chain, and peaq is how they get there. peaq OS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more.
I mean, yeah, I don't know. You and I were talking offline, but to me, this feels like the worst bear market because there's not a single like specific event like Terra or FTX, but you're putting MicroStrategy aside, which we can get to it later. Like we just don't have enough users. Like we're sitting at like probably less than 100,000 active users on chain. Why even bother being in crypto in the first place? And it's challenging when you have OpenAI hit like 1 billion users. You know,
Just to say something. So we were talking offline. That is not why I also think this is a tough bear market, but that's not why I think this is a tough bear market. I think this is a tough bear market because in 2023 or 2022, all that stuff blew up, but everything else was going down. It's like we had top, SaaS had topped, like the market had really pico topped, and like it all topped in 2021, right? Like SaaS and crypto,
rates go up.
and then rates went up, and then boom, everything came crashing. So we were all crashing together. And I think the reason this feels tough is because, like again, Ryan and I are at this event. Like there are other things that are going up an extraordinary amount, and people are getting hilariously rich. Like I thought, I felt FOMO in 2021 when we have friends who made ungodly amounts of money. And I know you guys did quite well yourselves. And you're looking around and it's almost laughable. And then this all-in event, like I was sitting next to a guy at dinner. He got a bunch of retail investors together for the last several years. He's returning $7 billion to them when SpaceX IPOs. So it's the amount of wealth being generated here is historic and unprecedented. And crypto people, if they haven't participated in that, are kind of feeling like they've been left out of. This was the dream, right? Is that crypto would, and what crypto hasn't been the thing. So I think that's why there's actually a psychological element, I think, that has made this bear market maybe tougher. But hold on, Ryan.
I think. Wait, can I add one point to that though? Because there's that New York Times article that everyone looks at, which everybody's getting rich but you,
Yeah.
right? And like I do think a little bit that what's happening here. I think that the one thing that's different about crypto as well, which I think it makes it very psychologically tough on people, is that there are a lot of people who have gotten hilariously rich, and all of those people are people who have left the space basically for the most part, right? Or they were this evangelist and they kind of turned into KOLs or whatever, and they kind of do these things that maybe you like or you don't. There's obviously Arthur Hayes telling you that hype is going to go to 150 one day, and then telling you the next day he sold all of it when nothing's changed. But a lot of it in crypto feels very zero sum. And people feel very much like for them to win, something else has to go badly, or they have to be against the rest of the market. And everything that's happening with SpaceX and then with Anthropic and with OpenAI feels very positive sum to a lot of people. And everyone's getting rich because things are working and they're being used. And so I think that mindset is a big part of it, because it feels very much like people just aren't able to do this in a collaborative way. It is a PvP culture versus a let's build something together culture.
That's really interesting. I also share your sentiment, but from a different perspective, that this has been the most challenging bear market, and I went through 14 and 18 and 22, and this one personally feels the hardest for some reason, even though financially it's been by far the easiest. And it's because so many people who were such purists are leaving the space. Like our fund, psychographically, 93% of our fund has been crypto natives, high net worth that want to yield on their crypto. And we've had, real like people who I never thought would sell a single ETH or Bitcoin, like picking up their stick and go home saying, I'm out.
Ryan, why are they doing that? Why are they selling?
So the purist feels like we have lost our way, in that the institutions did come, and that's what we always were wanting. The institutions are coming. The institutions are coming. Oh, the institutions arrive, and the crypto native ethos of privacy and self-sovereignty and and these crypto assets being the medium in which we transact, that has not played out, right? That it's mostly this time around, instead of value accruing to the crypto assets, values accruing to companies operating in crypto, right? Which is obviously higher Gini coefficient, less broad-based wealth distribution, less permissionless wealth distribution, and people feel left out in the cold in that regard. And that's been really disheartening to see is these people who adored crypto and were in it for the right reasons pick up their stick and go home. So yeah.
But what are the right reasons, Ryan? Because I mean, like crypto's sort of been a religion, but it's hard to for me at least, like, last coming into last year, I'm like, okay, super. I wrote an article about it. I don't need to rehash it, but it does feel it does feel like we've done a lot of things right. Like, look, Rob, your pound on the table on stablecoins and money 2020. I don't think you get a single skeptic almost at this point. Like
Very few,
largely,
to be honest,
very
or
few, right? I mean,
at least every company feels like they need to have a strategy. It's not as if now, there's a couple people at the place at each place that are working on it. And I don't want to derail this, but I had a conversation with somebody recently where it's like literally he's like saying my board wants me to replace like or just basically start putting everything on chain, right? And so you're seeing this at the board level, and yet you know this is happening as Ryan's talking about. And in fact, I was having this discussion with somebody else earlier today who was saying, to Ryan's point, the institutionalization happened, the boomers came, the ETFs worked, everybody was buying, and it's all the OGs who are leaving. And that's been this transition has been really tough for people.
yeah. I mean, the other thing is like, look, let's not forget, you know, we've talked. I think all of us would have agreed that like we're sort of like the 1990s era. There's just how many companies in the 1990s continue to exist today. Like whether you think Ethereum is like Cisco, TBD, but there might be just companies like Cardano's of the world. Founder just stepped out. Today, like those companies
Was
eventually
that really
like
just today? Do you think it was really just today that he stepped away?
he tweeted about it today. Rob is on.
Okay.
But you know what I mean? Like there's a natural selection evolution process in capital markets and technology that like I think it would be unreasonable for us to sit here and say, yeah, like probably 99% of the projects that have existed from the 2017, 2020 era are not going to be the ones that really like take us in the Amazons, the, you know, Googles of the world, and that might not be Ethereum. That might not be, I think Bitcoin still has a place in this world, but it might not be Ethereum. It might not be Solana. Maybe it's Hyperliquid. Um, but there's still a lot of innovation happening, right? I mean, I think we should definitely talk about the stablecoin consortium here of Circle. I think it was MasterCard, someone else. But that's why it hurts, right? Right. Because like, you see someone like David Hoffman, right, who's been a huge evangelist of Ethereum say, hey, look, guys, I'm packing up my stuff. Like ETH, the current, like the asset itself is, not moving, but the network itself is probably going to continue. So a lot there, but
A point of frustration that I would draw to is, for example, stable coins are, are capturing zeitgeist and gaining popularity both within the space and beyond. But the original sort of stablecoin, which I'm biased maybe towards that was true to crypto native values, right? So decentralized cash flows accruing to the token holders, MakerDAO, we're actually today below December 2017 price, right? And like, and they have over the time, they've done a lot of things right. They've professionalized the DAO, but they have cash flows on chain. It like it it did everything that we set out in the original white paper for, and yet the thing that has captured popularity is taking people's money and putting it in a bank and issuing basically a permissioned stable coin. When I talk about like the right reasons or like crypto native values, that's the thing that feels frustrating. Is that I would have thought in a world of stable coins, MakerDAO would have more traction because of these crypto native values. But people in the end don't really care about this, and that's why I think there's a lot of attrition with Vitalik's strategy, myself included, I'm deeply frustrated that like the things that he lays out in the crops strategy are just not the things that people want.
Yeah.
And and that's why people are exiting is that there is a disdain for the business side of running a layer one or a project that ultimately is his Achilles heel in spite of obviously being
Yeah.
incredibly brilliant.
Ryan, let me bring MakerDAO back to SpaceX for a second because I want to close the loop on SpaceX. For people who are wondering why are we talking about SpaceX here for 30 minutes on a crypto podcast, that it's the biggest IPO in history, and
It's also the biggest stablecoin transactor.
oh, that's interesting. Oh,
Yep.
with Bridge, right? Yeah. It is the largest capital event probably in the history. I mean, OpenAI raised 122. There's okay, so the SpaceX IPO is next week. I think it's June 12th. They're raising at a $1.77 trillion valuation. So to tie this back to MakerDAO, the reason I wanted to even talk to you about SpaceX is you can have things that will change the world, but you can also have irrational exuberance, right? So maybe MakerDAO actually will get it right, and you just had to have a massive run up and irrational exuberance and then capitulation and then slowly climb back up. And maybe MakerDAO is gonna, be huge one day. Is this the time? Is this that moment for AI? Right? Because that was the other thing I was feeling it all in is the event felt very similar to Breakpoint in Lisbon, Portugal, when everyone is, getting high on their own supply. And it felt like, yes, this stuff is going to change the world. And yes, these valuations. I mean, I was sitting next to a guy who got 3 texts in a 10-minute bus ride saying, I got access for you for Anthropic. I got access for you for SpaceX. 3 and 30. I'm only charging 3 and 30. And it was I don't know, it just felt so. Anyways, to turn this into a question, like, what do you think happens with the SpaceX IPO? From I guess up or down?
Yeah, it's a little bit different than and this is what I've historically loved about kind of the permissionless nature of crypto and the fact that there aren't lockups. There's no sort of like perversion around the price discovery. Crypto has the purest price discovery. Whereas SpaceX, what a lot of people are not factoring in right now is the significant shareholders, right? Significant shareholders are actually locked up for 366, so until next June 13th. That almost certainly, and I don't know for sure, but when I look at it from the outside, I would say that definitely includes founders, that definitely includes Valor, that definitely includes Fidelity, and that almost certainly includes Giga. That's 30% of float right there. 42% of float is Elon. So you're talking about 72% that isn't going anywhere. And then out of the 28% balance, everyone's like, well, employees are going to have to like sell to buy a house and things like that. Well, first of all, most of those employees live in Boca Chica. There's no $10 million mansions to buy, right? They're pretty dialed in. And secondly, most importantly, all of these employees have had a December liquidity opportunity every year since 2018. That's how we've all been participating is the December tenders. So most of the employees are not like, they're not cash strapped. They're not a starving entrepreneur that needs to buy the dream home next week. So, and that has both a good and a bad part. The bad part is we won't see true price discovery for over a year, right? Because we have, your classical low float, high FDV, the highest FDV with, really the lowest float, which obviously we saw a lot in 21. And so we know how that plays out, but that generally buoys for longer. And you can't get a true washout until you have true price discovery. We're not going to have true price discovery at least until 27.
Will you, if you had the opportunity to sell your shares, would you?
No. I mean, so I'm personally of the mind that the merger is likely to go through.
The Tesla merger.
Yes, the Tesla merger, because it doesn't trigger antitrust in this environment with Google and Amazon being basically like doing all the same things. So antitrust is not a legitimate argument. I think the merger does go through. That's accretive for SpaceX generally. And then I want to see the business kind of like settle into its true CAGR and its true cash flow and its true revenue structure before you can kind of really rationally apply comps. I've done all the comps analysis from like Palantir to Google and everyone in between, and it's just really difficult. You have to structure this Elon premium because the world pays about about a 2x premium on a comp basis for Elon to everything else. Incidentally, today at the valuation, it's about the same revenue comp to Palantir. So if you don't think Palantir is overpriced, then it would be difficult to say that SpaceX is overpriced. And it's a more important defense prime to the U.S. government than Palantir is, and certainly more defensible.
But it just also makes it hard to comp it, right? I think it's
It
just
does.
it has the outlier kind of things. The other thing, Elon obviously was talking about it, or he retweeted stuff like when Tesla went public as a $1.7 billion valuation, which at the time felt pretty rich, and now it's like trillion plus, right? And so that's like his point was like Tesla was a 0.1% of its current market cap at the time of the IPO. So you got to like the sort of read between the lines, like, look, I'm going to be extremely focused on making sure that we deliver on the promise and we continue to explore the universe, to the universe and beyond, kind of mean like. And so I think, what could, yeah, Yano, I don't know if there's anything else on the SpaceX stuff.
No, I was more just curious. You're so deep in SpaceX, Ryan. What are you still doing in crypto? Like, are you still, so I don't know if you've listened to Empire recently. We've been talking about like doing things on chain. Dialectic is very big. I don't know if you guys are like taking long short positions, but you guys are a big LP in DeFi, and DeFi has been, getting hacked out of the wazoo. So I would be curious to get your take on like what you guys are doing there.
Yeah, so we continue to yield. We have put a lot of resources and mind space into risk management over the years. After 1010, I had kind of made the quib to my team that it sort of felt like being in the Pacific Palisades fire, where we're the only ones who had invested in a sprinkler system. Which is risk management. However, it does not feel very good to preside over the ashes of our space, DeFi, that is, right? So there's only a handful of DeFi shops like ourselves left standing. And, there is sort of a very short lived celebratory moment with that. And then it's just really, really challenging. DeFi yields are down. Santi's made the point very eloquently that the risk adjusted reward for DeFi doesn't make that sense right now. And so we're seeing a huge migration into RWA DeFi, and we're doing that ourselves. So, you can go and get, you can go and take both sides of a trade, say like SpaceX, and lo and behold, the funding rate on the short is about 45%, depending on the platform right now. And so you can go and get good yields in RWA yielding. However, the big concern that you and I talked about is, given the frequency and the sophistication of the hacks, it feels like for me that Lazarus probably got a hold of Mythos. In fact, I'm like convinced that Lazarus got a hold of Mythos, and these hacks that are coming are just like, extremely sophisticated. And the moment feels a little bit like picking up pennies in front of a steamroller. But at the same time, I think we'll continue to see maturation in the space, and for those who survive, there will be another side to this. But we're going through it right now, certainly in the space. But I have definitely not. I'm not giving up on crypto. Not giving up on DeFi whatsoever. We continue to yield. I'm really excited about what we're doing, but you have to you just have to adjust in this space. Like, there are moments where things die and new things come up, and the open-minded, future forward approach is the only one that has ever really made money consistently over the course of the history of the game.
You definitely have to survive, and even though you have a very small probability of a hack happening, there's a social engineering attacks that are very sophisticated, and It's just the impairment risk is much, much higher in crypto, even though you can recover with law enforcement. And that has been historically a feature of crypto that is very transparent. But there's entities that allow Lazarus to launder and take money out, and this makes it hard. Or Circle is not awake on the weekend or stuff like that. How do you think about like on the RWA trades? It sounds like you're just like arbing off chain, like TradFi, and what's on chain. Is that just mostly hyperliquid stuff, or is there anything else that is interesting to you?
A lot there is a lot of it that is hyperliquid. It's also the first time we have historically been everything only on chain, and we had to kill that golden calf. And again, that's just like emblematic of the moment where these crypto native principles you have to reevaluate. Um, but uh, hyperliquid actually is really one of the great venues, and I think will stand to win quite a bit in the RWA movement. They're doing extremely well. But where the best yields come from right now is the delta neutral between on-chain and some exchange-backed like short position and the funding rate there, whether it be like Binance or Coinbase. In fact, Coinbase just started offering SpaceX derivatives today to institutional clients. So that's something that we're into.
Can we go back to something you said earlier around the 1010 and like what you mean by like we're kind of the only ones who are in real risk management? Like we've talked to some extent in 1010. I'm like, what's your like what actually happened? Because I think there's still doubts around what actually like what's your diagnosis of that and what are the ash? Yeah.
So a big part of it, as far as I have heard, is very large players, ones that I am very disappointed in because I would have expected that they had better risk management. Got caught on some carry trades, so like Hong Kong dollar for Bitcoin carry trade. That started the Bitcoin liquidation, but then the other liquidations sort of cascaded from there because and Jason, you'd made this point to somebody this week very very thoughtfully that they're all correlated assets, right? So that step down in Bitcoin caused the correlated cascade in every other asset, and this is what feels really frustrating. And I had a lot of OGs say, "Tell me this is why they're picking up their ball and going home," is because it like in 2025 we can't get risk management right as a space, and we still have large multi-billion-dollar shops doing this level of irresponsible, highly leveraged, looped or loop leveraged yielding. It feels very frustrating. It's one of those things that the rest of the world can't take us seriously until we stop doing this irresponsible stuff.
Well, I mean, you had Lehman blow up and a couple other shops blow up.
Yeah,
But
yeah,
there's like
Suisse.
Dodd-Frank. Rob, when's the Dodd-Frank of crypto coming out? But are we going into another 1010 here? I mean, obviously, like we have.
You're
There's
talking
two things I
you're
want to.
talking MicroStrategy?
Well, I was gonna go there, but I do want to make a just a slight pause here to talk about like I've seen on the timeline like the pump and dumps that are like at a greater scale. Like you have like I'm not like I haven't looked closely in this, but like Lab and a couple other projects that like on the timeline there's like I don't know how substantiated that is or not. I don't know if you know for a fact, but it feels like there's a certain market maker entities and exchange coordination around some of these tokens that just cause a lot of damage and wreckage, especially for retail. Like I'm talking about like coins that are like 99% held by like top 5 entities and then super low float, and then you see a huge wick. It feels like a lot of market manipulation. It feels a lot like just insider dealings that like just betrays. If we talk about like retail coming into crypto, they just are deeply uninterested in this casino because it's not fair, it's not transparent, and even though the house technically always wins in Vegas, in prediction markets, in crypto, it feels like crypto's just in a bad spot to inspire the next 100 million users to come and speculate in this stuff.
Well, it also burned the last 50 million, right? Like people who came in, say, late 21 and since, whether it was trends with meme coins or late play to earn gaming or otherwise, they feel really burned today. I actually sat down with a family office in Hong Kong in March, and the son of the family office happened to sort of be involved with Axie Infinity, and he said no one in the Philippines will get into crypto anymore because everyone feels so burned by Axie Infinity. And I thought, man, because obviously we were investors in Axie, and I thought, wow, that is really painful to hear that entire country has written off the space because they just feel burned. And like, that's not Sky Mavis's fault particularly, but there is this thing like every time we burn a bridge with a retail customer who gets into a coin that goes reverse hockey stick or so on and so forth, we lose long-term uh long-term participants, and the cost of sort of customer acquisition goes up each time, right? Because you can't get them back. You have to get some new incremental entrant back. And we're kind of like running out of time and running out of people to make that pitch to.
There's a thing I've been saying to a number of people because I get asked this question all the time because I do a lot of these appearances and whatnot, and people are asking me like, why are there not more retail participants in when Bitcoin hits $120,000 and et cetera. And one of the things that I think is underappreciated last year was that it was by far and away the most value destructive year that we've ever had in crypto, despite the fact that Genius Act happened and there's all this like retail excitement and we had Bitcoin all-time highs and Solana all-time highs, etc. But when you think about what happened with the Trump meme coin and then the Melania meme coin and then the tariff tantrum and then the 1010, and you think about like who are the people that really get caught off sides on these things, yes, there's institutional people who get caught off sides on these things, but it's really the retail investors who get hurt the worst. And when you take that into account and you say, okay, well, there's this thing that's happening where, we talk about it all the time, like, oh, there's institutional adoption and that's exciting and we're getting what we wanted, et cetera. But everybody who invested in this space, the hodlers, the people who were excited about, what was happening and coming, all of them lost money. Then, who's left, right? There is, because at the end of the day, Broadridge doesn't give a shit about the price of Ether, even if they're using a blockchain to like clear some repo transactions, right? And I think that's one of the biggest things. And I had a discussion with an investor recently, to your point, Ryan, about Axie, who was saying, was talking about and I won't actually name the token because I don't want to, but it was talking about, have you invested in this token for this new project? And it's sort of like one of those things where, a bunch of insiders in Silicon Valley are like, oh, this is like interesting and we're going to pump it and, et cetera. But everyone I talk to, there's actually no one believes it can actually work. And everyone's like, well, I've just seen this movie before. It goes up and then it comes down when everyone realizes it doesn't work. And it gets back to my point I said earlier about how zero sum the space feels, that there's so many people taking that perspective around investment decisions, which is like, oh, this thing's not going to work, but it'll go up and it'll come down. And at least in traditional venture capital or traditional markets, people might make decisions on, oh, well, this is a founder who's good at raising new capital, or this is a something that I think can attract others. But nobody says, oh, well, this thing sucks, but maybe I can dump it on somebody else first.
On this point, before we go to MicroStrategy, and it's a good segue into this is sort of the DATs, which I think has also been super value destructive. I mean, Bitmine to pretty much every DAT, it was just, I mean, it's SPACs all over again, but just specifically more destructive for the reputation of crypto because it is sort of the armchair skeptics about crypto look at now DATs and say, yeah, like again, we're right. You can't put a token on a corporate wrapper and expect it to perform well. And look, will they recover? TBD, right? But certainly, like if you look at the performance of particularly something like Bitmine, it's just incredibly value destructive, and it doesn't help. You talk about Arthur Hayes kind of talking about like I remember when he shilled his prediction for hype at like 185 had like a discount rate
We
of
said
like
150 3 days ago.
150. I think it was a presentation on Tokyo like a year ago, and the discount rate was like the whack on that was like 6% or something. I'm like, okay, well, clearly he worked at an investment bank. So, anyways,
yeah, terminal growth at 8.
yeah, exactly, ludicrous, right? But again, like, what needs to happen for crypto to grow up? Like, is just like certainly like Rob, I don't know, in Money 2020 people talk about DATs, and does that even compute?
No, nobody is talking about DATs.
Were they
DATs.
last year? Because
No, they weren't talking about DATs last year. I mean, last year it was actually the same things. It was Genius and it was in stablecoins and AI. I think last year there was a little bit more excitement because we were right at the, Genius had basically gotten past like around the week that this happened. And so there was a real just like excitement about, okay, well, now what does this unlock for stablecoins? This year, there's actually a little bit of, oh, well, we haven't seen as much growth as we thought would happen in the last year. It's been a little bit slow going. I kind of discount that a little bit on the stablecoin side because, like, let's just be real. If you're a Fortune 100 company, you waited until Genius to get a stablecoin strategy, and then you waited 2 quarters to get a stablecoin strategy presented to the board, and then you hired people, and like now that thing's happening, and so we're seeing some of that in my portfolio companies, and we're seeing some of that in where it just takes time because these are you're moving the Titanic in a lot of these things. But I think to the point about DATs were, this was not a thing that ever made its way really to the non-crypto world, but there were all of these people making these presentations last year around, oh well, you can create Bitcoin per share, you can create Ether per share, and mathematically they weren't wrong if in the right market conditions, but and maybe this is just human nature, but we talk about market conditions in a sense that we're prone to be positive. And so we're prone to like discount, to Ryan's point earlier about nobody having good risk management. We're prone to discount the downside. And so, I heard people say to me a month ago that, well, Michael Saylor is going to take us to 120,000 Bitcoin again because he just keeps buying. And this happened for a while, right? And now all of a sudden, he sells 32 Bitcoin, and the market basically sees it as, well, he's probably priming us for more sales. And Stretch, which is his preferred note that he's issued, trades down under par, and it looks like now he's probably selling a bunch of Bitcoin to cover those dividends, and it looks like a Ponzi all of a sudden. And it's like, maybe you were right that, okay, well, in the right market conditions, this thing would, create Bitcoin per share. But in the same way, it can go up and come down really reflexively and really aggressively and violently. And the fact that we continue to put our hope for the industry in financial engineering and not, real world use cases is a big part of the reason that we're in the situation we're in.
Yeah. The question that I always have with respect to MicroStrategy is, what is his number? There is a number. It's probably somewhere south of 30, probably now due to buys last year higher than teens, where his creditors do liquidate it. And like, maybe it's not like a specific liquidation number, but there is a number underwater where things start to implode there. And then obviously that would be the ultimate sort of liquidation cascade for the space. And maybe that is the like healthy washout, no bailouts, that is a manifestation of crypto native values that the space needs to see. And also with, MicroStrategy being the defining DAT, but lots of these other DATs have numbers where that, like, the debt positions that they've taken on to make these acquisitions do get liquidated. And that's my big question. He's highly incentivized to never state the number and obfuscate it maximum amount possible. We saw that in the FTX collapse, where once Caroline tweeted that number of like, this is where we'll buy, you knew that was their number. and and it was all over after that. So he's, you're not going to get the number out of him, but um, look, where is that number, and and what happens should we hit it?
There's I was talking to somebody who I respect tremendously, who's been one of the most successful traders in the space over the last decade, who was telling me today, and I think was being overly bearish because they like to do this, but was saying, "Oh, I think it's possible Bitcoin hits $40 or $40,000." And it's 63,000 today. It looks like potentially we hit the 50s for sure. And you know, there was another person in this chat who was like, well, at $40,000, like I would just put all my cash back into Bitcoin. Like I'd feel really comfortable finally, like, taking all my cash, putting it back into Bitcoin. And one of the things that I said though, is like, we've now built this business and this industry around all of these central counterparties, to your point, Ryan, about like, that's where all the value is accruing to all these companies that exist around the space. And it's not entirely clear to me that we're in a situation where, like we were in 2018, where Bitcoin can have this crash, and it doesn't just kill the rest of the industry, because it's no longer about, to your point on all the OGs leaving, around like this hodler mentality, this crypto ethos mentality. It is now a industrial marketplace for all of these large corporates who are building here. And if that happens and those companies blow up and the venture dollars blow up, and the we have the washout, not just on the retail side, we've had it before, but everything else that's been built around the space over the last couple of years with Larry Fink and JP Morgan and all of these guys, it's not quite clear to me that you can bring the original ethos back, and you definitely won't keep the institutional ethos.
That's an interesting take. Yep.
I mean, the thing about Saylor though is, like Luna and like every other financial engineering out there, Lord knows I've been here far too long to know how these things unwind, which is why I've always told people, look, you want to be bullish Bitcoin, buy the goddamn thing. It's easy to buy it. You don't have to go through a stretch and some financial engineering. Like eventually arbitrage strategies blow up. They do. Like it's just a ticking time bomb on a highly volatile asset. And so like, I don't know what was going through his mind when he launched Stretch and then he like retired some of the debt. I mean, a lot of these things are, from the outside in, look extremely fragile and not sound what I think MicroStrategy relative to other DATs. Like they were pretty clever because they were first, because of their position to like structure things in a way that, by the way, many other DATs just do not have that same level of structure and downside protection. But again, like a lot of these things are built on like reflexive loops. So as soon as you degrade trust, whether you sell 32 Bitcoin or 500 or 1,000 Bitcoin, it doesn't matter. That like you just entered a whole, you basically went from being the Bitcoin Jesus, which is sort of very counter to the Bitcoin ethos of like, Satoshi was never out there, and you now have a very public figure that promised you to never sell, and now it's sold. Like game over. It will end. Like it's a matter of when, not. So to me, I think it goes way below 40,000. I mean, this could be going down to 10K.
I mean, if it hits his number, for
If
sure.
it hits his number, for sure, it spirals
sure.
out. I don't think you hold 40.
No, clearly not. No, I mean, there's so much that if there's a forced unwind where creditors are coming in, or because he's got all these preferreds, they go and unseat him and just like unwind the business, so to speak. That 10K could be high, right?
Yeah, why stop there if that's happening, right? I mean, he owns what, 6-7% of the supply? Is that high today?
Does he own 6?
Maybe that's a little high actually, but
Let's end it on a high note, guys. I mean, I think
I don't know if there's any high. We're like the end of the world is coming.
The end. There's no fear monger. Look, to your point, I think I did feel crypto had Go ahead, Ryan.
So a high note that we draw to in the office actually dovetails with your first point around like products and assets that people are excited about. And um RWAs and everything kind of moving on chain and then us being able to sprinkle in the advantages of crypto and like using crypto primitives, but backed by these assets that people have stronger confidence in, like a Google and Nvidia, a a Tesla, a SpaceX. That feels like something that is really interesting for me. That if you can go and produce a natively denominated yield in Google, that's just a great asset to hold, right? Like, there's a dominant company, and then I can get a little bit of a boost, and crypto helps me get that boost through crypto native primitives. That feels like a use case that we can stand on. It very obviously in this environment, the sort of killer app or the useful use case of crypto is financial related. This is financial technology at the end of the day. That's why, Rob, you're there in a fintech conference and people are ultimately talking about these things. And that's because even if the underlying crypto assets are not interesting, the primitives of crypto do remain interesting, right? And that's exciting.
And so, I just want to correct my thing earlier. It's 4% that he owns, not 6%.
Okay,
4%.
I was just typing it in to see.
Yeah. Might there be a state of the world, and may not forever? I think eventually valuations do catch up, but you have a great service and technology, but that doesn't mean it's worth 200 billion. Like Uber for many, many years was a great service for the consumer. Like consumer surplus was phenomenal, but the price, just the unit economics were not there. The price was not there. And look, now 10 years later, record low interest rates allowed it to get to the point where it was, and then public markets, and then, but it took a while. It took a while to get there. And I think crypto is, in my mind, always been way farther ahead on the valuation against fundamentals because it's so nascent. It's exciting. It captures the zeitgeist, and there probably is a healthy reset. And I think that's what makes it the most uncomfortable here, which is, I think to your point, Rob, like no one is contesting the utility of stablecoins. But it is an uncomfortable kind of truth that we have to face, which is, okay, say stablecoin volume grows up 10x and agentic takes off, and that doesn't really accrue value to the network. I think there's a reset that probably needs to happen. Maybe it's regulatory unlock that allows us to clarity, that allows us to really design tokens to capture more value, and or other players capture that value, whether it be Tempo or MasterCard or Visa. And is that like a bad thing? No, I don't think it's a bad thing. I don't also think it's a bad thing that like Robinhood and some of these other financial institutions are now adopting primitives, to your point, Ryan, prediction markets and perps. Like there's just a lot of financial engineering that has come out of crypto that is, in my mind, it's a win. And I don't think we should, like, as much as it's painful, we should sit here and say, hey, crypto is like useless. Like all this stuff, like all this venture dollars, over 100 billion invested in, all three of us have participated in. I don't think it's like, not all of it went to waste. There's a lot of experiments, but you know what I mean? Like there's like, crypto's not going to die. The primitives are there. More innovation will continue to happen. Although I am curious from both of your sides, because you're way more active on the kind of investing side, is the talent really there now? Because like over the last like 10 years, you saw like really great cryptographers and engineers, people that wanted to come and build in crypto. Now, I don't know.
Well, I will say this. I'll say two things. So first, on to both Ryan and Santi, your points about what's happening in terms of like bringing assets on chain. Earlier today, I recorded a podcast with chair of the CFTC, Mike Seelig, and this will come out on Monday, and it'll be the first interview he's done since he launched the perpetual guidance for first U.S. regulated perpetuals last Friday. And if you want to, feel bullish about the future of regulated on-chain markets in the US, listen to that podcast on Monday, because he is so bullish, and he talks about how bullish the administration is and how they really want to push this innovation, and they see it as true financial markets innovation for the first time in decades and having on chain. So that should make you feel bullish. And there's no and I, it's almost mind blowing to me if you had told me in 23 that we'd have the sitting chair of the CFTC talk about bringing markets on chain in the way that he's talking about them today. So that's amazing. And then when Tasanti, to your point around, well, is the talent there? I mean, we're gonna announce. We were slow to start the year, but we're gonna announce probably at least 3 deals this month, maybe 4 that we've led. We picked up a lot, and if I think about the founders of those companies, they are some of the best founders that we've ever backed while we've been here. But they're in specific categories where we're attracting those founders. So to your point, Santi, around, okay, the best cryptographers, or the best deep engineers, it's not clear to me that we can compete with AI right now in terms of the best engineers in the world. But if you think about a lot of the best builders in fintech and payments, there are actually many of them here. And, I went to this, we co-hosted this dinner with a portfolio company at the Van Gogh Museum a couple nights ago that, the founder of that business was, I believe, the youngest SVP in WorldPay history. And he brought basically the who's who of everybody in European payments to this dinner. I just showed up and put my logo on the door. And so that's nice. But I guess I get a little bit of credit for that. But the excitement around things like that is there. And so the talent's there. But it is a fragmenting market very much. And it's clearly just breaking apart at the seams where there's certain things where there's really excited talent and there's really excited innovation happening. And there's, a lot of the things that we used to think about, people just aren't there anymore.
Yeah, I would echo this, that I was just in San Francisco the last few days, and that does feel like it's AI everything everywhere all at once. However, in March, I was in Washington, and the chair of the SEC and CFTC spoke at the Milken conference there, and Washington was abuzz over crypto and particularly stable coins. The conversation was all stable coins, all crypto. And so I think you guys are probably seeing the same thing where founders and like teams that we're seeing in the space today are um, say more mature in some ways. Like, is crypto getting the hot young dropout from Stanford? Less so than say the 17-18 era, but at the same time there's like really talented executives who are taking a really prudent approach to building a business on top of crypto. And it feels like that's where value is accruing right now, less to the crypto native assets, and that get ahead of their skis on valuation, which ultimately has really been an Achilles heel for a lot of projects, right? You go from seed to public effectively in a few months. That thing gets ahead of its skis. It causes a bunch of problems internally with these young talents, and now we're having a kind of a slower roll with more mature executive teams in crypto, and that's okay. Like I like that. I'm not completely adverse to that. Is it a little bit less sexy? Yeah, but it's probably more sustainable in the end, a little bit more stable in the end as well, pun intended.
There's a lot of gray hair on this podcast. So
Yeah. I mean, you go to events and there's suits. I went to DAS a few months ago. I was like, "What? Like I've never seen this number of suits in my entire career in the space." Right.
Well, to your point, Ryan, I think this year, maybe spilling into next year, you will see some of the hottest fintechs, some of the largest companies use stablecoins, and I think that inspires the next crop of fintech founders um, to build in space. Like you mentioned earlier, you see SpaceX be the largest, like using stablecoins, and that becomes talked about. And then Ramp raising a huge round this week. They're into it. And you know, I think
Trump's
that
leaning into stablecoins a lot, you know, and they're, I mean, they're close partners of Stripe.
right.
And I actually think it's very interesting. There, I think people outside of the space are more bullish on the space than many people inside the space at this point.
Yeah, yeah. Again, the networks and the technology works.
Lots of new entrants who are really excited about the space that is ultimately compensating for the jaded OGs that are exiting, and that's okay. Whether you got to have these like refresher moments, whether it's we got to have a washout of a sailor, or we got to have a washout of OGs and the like paradigms of that era. That's okay. That's part of the evolution and the maturation of the technology, and we'll get more legitimate businesses building using crypto primitives as a result.
Yeah. Yeah, I think eventually we've got to wrap soon, guys, because it's late. But I think the lines between crypto and non-crypto gets blurred. Like it's just fintech, and fintech encompasses like stablecoins and tokens and tokenization writ large, and it just becomes irrelevant to make that distinction. Guys, before we wrap, should we talk about content of the week?
Of course, can't we? Ryan reviews. He doesn't listen enough to all the way to the end. He doesn't.
So Ryan, we have a little, we have a this show. We have a tradition where we have content of the week, best thing you've read, listened to this week or last couple of weeks.
Listen, the best thing that happened this week on any content was the New York Knicks coming back from down 14 to win game 1 of the NBA Finals. So NBA Finals, that is the content of the week. And then the World Cup starts next week. So that's the content I'm thinking about.
It is a great moment in sports over the next couple of weeks here. For me, the content of the week is if you watch any presentation out of the All-In Liquidity Summit, watch Thomas Lafonte's presentation of CO2. He makes this very compelling argument that as you go up the scale from billion in unicorn land, so from $1 billion companies to $10 billion companies to $100 billion companies, you actually get a higher probability, a substantially higher probability of a 10x from there. So companies that achieve 100 billion in value have a 31% chance at a 10x, whereas companies that are at 10 billion only have an 18% chance. And so that one slide explains this whole movement towards the excitement in the secondary market and all these nested SPVs and everybody piling in to the same 25 names, because when you take a probability-based return profile on that, it's easier in today's environment to just pile your money into $100 billion unicorn or a centicorn, so to speak, than it is to take a probabilistic approach at the 13% chance that your unicorn can 10x from there. And that really flies in the face of a lot of you know sort of standard thought in venture, and I thought that was really interesting.
I love that. To dovetail on that, I heard Brad on TBPN talk about this exact same point. He said the best venture returns have been in the public markets.
Yeah.
And I think it runs counter to the, venture kind of asymmetric, like, law of large numbers. You can't really compound much at that point. But, he was making the point, like Jensen Huang, also with Michael Dell, like I think it was like a Bloomberg conference. He was like, look, we're going to see $10 trillion companies. Like, why couldn't we see that? And I think you just have to like shadow that ceiling.
Yep.
Of course, it's going to be irrational.
The best venture returns are just about to be Anthropic and OpenAI and SpaceX. So that is more of a result of the fact that people used to go public earlier, and now you go public at $1 trillion and you get great.
Well, it's fair, but the IRR on if you're in NVIDIA 5 years ago, or if you're in SanDisk, Micron, some of these things have had a phenomenal run. So it depends on how you look at it, like, cash on cash or IRR, or risk adjusted, like it's all these things. But yeah. Is Brad, the Altimeter founder, was on TBPN talk about this exact same point. I think it was last week. And he also talks about the initiative to give everyone in America, every kid in America, like I think starting them off with S&P 500, like I think it's $100 or $250, you know, and which I think like obviously he was huge part in getting enacted in legislation. The Trump accounts, I think, is what it's called.
Yep. The Invest
Amazing.
America Act.
The Invest America Act and the have everyone kind of benefit in the compounding factor. Like as I think about raising kids, like teaching how to like the value of money and how to invest, like something like that is not taught well enough in schools. But if you give someone an account, they could monitor it. I think it's like an amazing initiative that I think every country should adopt.
Yeah. When do you think we see an Invest in Spain Act?
No, Ryan, come on, man. Probably better earlier in Switzerland or
Well,
Europe's tough, man. Europe is tough. Ex Switzerland, Europe is tough.
that could be something that, you know, all three of us are sitting in Europe. That could be something that we could chat through next time. Is like, also, where does Europe go from here in this moment?
I will tell you that has been a big part of the topic of the conversation here at Money 2022, which is just how overregulated Europe is. Which usually Europeans, in my experience, are very defensive when you say that. They like don't want to agree with you. And now it feels like there's some capitulation that even the Europeans are like, yeah, we need to figure something out.
The dilemma that I spend the most amount of my time thinking about here in Switzerland is, you know, Switzerland's a very well-run country, but can a country stay healthy while everyone around it is sick?
You and me, Ryan. Topic for another podcast.
All right, guys.
For sure. But look, congrats on Ryan on SpaceX. I had no idea, but you know, amazing.
Thank you. I appreciate it.
Yeah, that's great stuff. Thanks for coming on and sharing your insights.
Well, I appreciate you guys and everything you do in space. So thank you for having me.